Welcome to the Market Alert for Tuesday, the 28th of February 2023. The last day already. Unbelievable, isn't it? Stocks and bonds rally despite terminal rate and inflation expectations. There is nothing positive with respect to the economy. This is what I keep saying in the Market Alert. There's absolutely nothing, and yet the market continues to move to the upside. Stocks and bonds rise into month end ahead of a plethora of Fed speak. That's obviously coming down the line. That's going to be next week. US stocks were positive but closed off highs as yields softened after mixed data releases. That was yesterday, the pending home sales and the other data, which escapes me. Let's just have a quick look just to remind me. There's so much that's released. It was core durable goods coming out at minus 4.5, and the durable goods coming out at 0.7. That was the mixed bit, but the pending home sales were amazing. I mean, they went up 8.1% from 0.9 and 1.1 previous, and yet the market managed to rally in the morning a bit for the DAX and the European markets. The afternoon was slightly different for the US, with it pulling back a bit. But yeah, it continues to move to the upside, doesn't it? In one way, shape, form or another, or any excuse. So let's have a look at the stock markets. We'll kick off with the Dow for yesterday. So in the Dow yesterday, daily chart, you can see the market rallied up through the 5-bar moving average but failed to hold, with the pending home sales at 3 p.m. moving the market lower. Overnight, the market's still below the 5-bar moving average. Inside of here, from this low to this high, we have another 89% retracement, and you can see it converges right on the line of the other one, which is drawn back from here and then projected down. So the 32692 is an area where there is likely to be some serious support for the Dow should the market move down to this area. In the 30-minute chart, you see yesterday moving all the way up and trading to Friday's high, and then the pending home sales stopping this and the market moving down. We did get a bit of a bounce and then back down to the DP. So the DP coming support for prices. Then overnight the market rallying to the DP. And then this is a bit of a resistance in the market moving lower. However, we do see some support coming in. We're oversold and we've got some demand there, and also the close. And in the implied volatility for yesterday, not a great reduction, down to 1655 from 1665. And the most unusual thing here is we've got prices moving down and the implied also moving down, which I've not seen before. This is not the way it normally works. So the only way that the implied volatility is going to kick off is if the sort of support that we've got across here is broken aggressively, and then you'll see the implied volatility move to the upside. But normally you get a situation where it drops off and the market moves higher, drops into that 1470, 50 area, and then moves down, and then the implied moves up, and we're seeing a different thing here. We've got this sideways move, of course, but we've got this channel, and like I say, it's going to have to take a break to the downside like that, and then you'll see the 1655 increase sharply. We're going to need some news to do that. In the German DAX, straight reversal yesterday, and the market trading back to the 20-bar moving average and the 5 green bar, but overnight, bit of weakness for this market. 30-minute chart, there you can see yesterday we went up 100 and just under 150 points. I thought it was more than that actually, 100, yes, 200, that's more like it, yeah, nearly 250 points. And then the market coming back on that news. Overnight the market sitting sideways and starting to move again. So watch out for the high if the market has a run at it. If not, the low to the left, this green line which ties in with the DP, that will be an interesting one. Also from this low to this high, we're sitting at 38% retracement, and I'm just going to remove this. And also from here up to the overnight high, you'll see that we come off the 89 as well, which ties in with the DP, and that's an area where you can expect to find support, and we saw that with demand coming in, albeit small amounts. It's still an increase based upon or compared to the previous low volume bars there. 5-minute charts, yesterday morning you'll have seen the market moving up, never stopped, took off immediately once the cash market opened. They wanted to bring it back after Friday, and then it just stayed sideways for a few hours, then moved up initially with the US market, then came down with the pending home sales, and overnight, like I say, the market's finding support at the DP and moving back at the moment. Just got to take out these areas of resistance and head back to the high of yesterday. In the S&P, the market also under a bit of pressure, up in the overnight electronic market, but down once the cash market opened yesterday afternoon, and overnight the market also showing a bit of weakness there. There's your up move, there's your pending home sales, there's a rally back, relief and profit taking, then back testing the DP, just the same as the Dow. Overnight the DP has been tested, the underside has been tested, and then the market's pulled back, but again you can see them buying back in where the market's oversold, and the stochastics have crossed over as well, which means you want a market to close, rally, get above the previous day's close, the DP, 200 MA, R1, and the high in the R1 there in the S&P from the 30-minute chart will tie in with 89% retracement there. In the FTSE 100, we're back to green yesterday for this. Whether the Irish Brexit deal had anything to do with this, I very much doubt. But we're oversold on the downside. A relief rally or any sort of rally will be useful for this market. 89 will take you back to 8,025. At the moment we're still below the 8,000, down at the 934 area, trying to hold above the 20 bar and the 5 bar moving average at the moment. Yesterday you can see the spike to the upside, the market coming back with the news, and then back up to the high being a bit of a resistance area yesterday for this market. Overnight prices also finding support at the DP, and there's your demand also oversold, and we need to close above the 50-20 close and the high. And once again, if we go back to yesterday's high down to this low, that will give you areas of resistance on the upside as well. In the GBP JPY, yesterday we broke out through that 200 MA 5 bar moving average, trading up to the 62% retracement there. Market struggling a bit with this overnight. Yesterday you can see the move to the upside coming off the 200 MA with demand oversold. Got the DP just below this as support, and the market just continuing all the way through. On the Asian market, finding a bit of weakness at yesterday's high and then coming back and showing a bit more there. Support would come in certainly at the DP and the 50 EMA there. In the pound, also reversing yesterday as the dollar showed a bit of weakness coming off that 200 MA which we spoke of yesterday morning. Overnight prices trying to come back slightly as the dollar has gained a bit of ground, and the 5 MA there will need to hold this level. 30-minute charts, we were coming off the Friday low, market moving all the way up with the dollar weakness and profit taking from Friday, and then overnight the dollar's gained a bit because they can see that rates are going to have to go up by more than 25 basis points because of the continued inflationary data that's coming out. The high is not far off at all, and the market showing a bit of support overnight as it's became oversold with demand, crossover, and now starting to move to the upside there. In the dollar yesterday, you can see this selling off a bit down to the 200 MA, the buyback in at the 200 MA, and then the market's been moving up overnight. In the daily chart of the dollar index, let me just squeeze this up a bit. You can see that yesterday we had a down day, but overnight progress is already being made, moving prices back to the upside. This means that the reprieve in the metals is going to be short-lived, so let's have a look at that now. So in the silver market, yesterday, it's lower again, and overnight you can see the market starting to find a bit of support, but as night follows day, this low is going to be taken out, and it'll be taken out with ease as well, as they want to continue to move the price of silver to the downside. We've seen this so many times before. The pattern is they bring the market back during the overnight session, and then it just gets monkey hammered back down with the LBMA pricing and the traders when they come into JP Morgan and Bank of America. Talking of which, Bank of America total fines for last year for bad behavior, to put it politely, manipulation of markets, was 1.2 billion. Just let that sink in, and then people say there's no manipulation. The gold market down to 78% retracement, holding well, holding better than silver, as you'll see in just a moment. 30-minute chart managing to move back up there, nowhere near yesterday's low at the moment, and trying to get back above the DP. This is reflected in the gold-silver ratio, which you can see there. We're already continuing to move up there as silver gets crushed compared to the gold market, heading back up to that 90 area there. Okay, that's it for this one. Let's wait and see what the market does today. Just a quick look at today's economic news before I conclude. We've got 3 p.m. consumer confidence, so the market's got to make its own direction this morning, and the Richmond Manufacturing Index came out at -5 last time, -11 previous. Again, that's not helping things at all. So yeah, 3 p.m. is the first lot of news. Anything outside of that's going to be used, no doubt, to move the markets back to the upside, and certainly back to yesterday's high. Okay, that's it for this one, and from me, as ever, thanks for watching. See you in the next one.